And for more on this year's legislative meeting and the overall economy in China, we're joined by Einer Tangen, current affairs commentator. Einer, good to see you again. Welcome back on the show.
Thank you, Michelle. Good to be here.
Einer, big news over the weekend. The People's Bank of China cut the one-year deposit and lending rate by 0.25%, 25 basis points. What do you make of this move, and especially the timing right before the CPPCC kicks off?
Well, I don't think it's any coincidence. I think clearly they're trying to make a strong signal that economic progress is front and center.
And is the stimulus move enough? Do you expect that we'll see more during the session?
Well, I think if you look at the history of the PBOC, they tend to make very sharp, very quick corrections over a relatively short period of time. You have to remember that fiscal and monetary policy for the Chinese is just one part of the toolbox. In the West, we tend to rely on them extensively, but here they're used in concert with more direct reforms in terms of stimulating the economy through whatever economic stimulus that they have, whether it's targeted infrastructure or social programs, etc.
All right, well, I know many expecting that during the upcoming legislative session, China will lower its economic growth target for 2015 to around 7% from the 7.5% target of 2014. Last year's target of around 7.5% was just missed, with GDP coming in at 7.4%. The IMF, the International Monetary Fund, recently lowered its China growth forecast to 6.8% for this year. What do you think? Will the target GDP be lowered, and to what rate?
Well, I think conventional wisdom is it'll come in at about 7%, but you have to understand in the past, the Chinese government has always underestimated what it really thought it could do. It tends to err on the lower side. But the important thing to be looking at here is that China is trying to get away from the one-factor measurement. They're trying to emphasize more about efficiency, about job creation, and also real wage increases. These are the types of things that are going to move and sustain a consumption-based economy as they move away from this investment-led past.
Well, I realize that there is a transition and there is a shift, and it's not growth at all costs anymore. But in terms of a GDP number for this year, what is your forecast?
I think it'll come in at 7%. In terms of real terms, I think it'll be coming in somewhere above that, 7.2, 7.3. The difficulty today is the geopolitical situation, the international risk that's going on with hotspots in the Middle East and Ukraine, a faltering Europe, the Greek issues, et cetera, et cetera. But I think there's going to be strength within the U.S. That'll continue. I think there's some signs of some positive things happening in Europe, partly due to the lower oil prices. But we'll have to see how that measures out in terms of political instability on the other side, countries who have been depending on oil revenues, et cetera, et cetera. These are things that the Chinese cannot directly control. So these are going to be the real beta alpha factors.
A lot of things that they can't control, a lot of things that they can control. And as you mentioned, the government is looking at making major reforms in various areas, fiscal reforms, price reforms, and state-owned reforms. State-owned enterprises reforms are supposed to be in focus. What do you expect in terms of changes to SOEs?
Well, you know, we saw last year there are already moves to take like Sinopec and spin off their retail establishments, their gas stations, et cetera. That represented a 30% share. I think you're going to continue to see this. And the reason that you should be looking closely at the numbers is 30% is below the threshold where you're giving away any kind of long-term or strategic control. The corporate structure here in China is a little bit different from the U.S. It's not a 50-50 basis. 50-50 controls the short term, but the long term big decisions have to be voted on, and 70% have to agree. So I think you're going to see a continuation of this kind of of putting it out there. It's also very, very good for the market, insurance companies, et cetera, who are people who are making long-term bets, pensions, who need to plug into the economy. This is going to give them an opportunity. So while a foreign investment will be important, I think the major lead on this will be domestic Chinese companies who are trying to figure out long-term rate returns.
Einer, what should the top economic priority of the session be?
Well, I mean, if you look at the Chinese government is the number one consumer of surveys, et cetera, I mean, you see a little bit of a dichotomy. When you start talking to people, it tends to be issues about pollution, quality of life, et cetera. But when you start looking within the machinations of the Chinese government, they're really looking at how to sustain a long-term growth. And this is what is very, very different between the centrally led versus a democratically led government. The central government is saying, what pain do we have to undergo in order to sustain the future? And they're willing to do that. You've already seen that. I mean, this whole economic restructuring that's been occurring now couldn't have come at a worse time in terms of the world. It would have been much better if there had been boom times to do this. But they are very, very determined to see a complete structural change. And that is one that emphasizes their competitiveness. I mean, a lot of the Chinese government is looking at the successes that they've had in the cell phone markets, into internet, at Alibaba, Tencent, et cetera, et cetera. They see this as the new economy, as a way that China can lead the world and be competitive. And I think that's going to affect the SOEs because they're now under pressure to produce the same way that these other entities who've had more market pressures have.
And as you mentioned, a lot of geopolitical and global pressures as well. We are going to have to leave it there. As always, thank you for your perspective. Einer Tangen, current affairs commentator.